Uh, Welcome back, guys. Thanks for joining. But before going further, please let me know that you can hear me perfectly. The voice is okay, and I will go for further discussion. Okay, please let me know that you can hear me. I have just turned on the subscriber mode. That means I really don't want to reply someone else comment who are not with me for longer. Okay, so it will help me to explain things because some people will come and they will ask me the same question I replied so many times. It's really destructive. I mean distracted. Okay, so voice is clear. Thank you, brother. Okay, so when voice is clear, that's cool. I would love to show you something beforehand. Okay, uh, Sandhya traders. I mean that trades. So Sandhya trades. I was actually watching her live streaming. I mean the reason was you will see the people who are commenting over there, the inner circle trader, and also I think yeah, Patrick. Some of the people also over here. So I would love to show it to you, so that what does his trader meet up on? No, I'm not. So I think if you just watch her video or live streaming, she's very famous now these days, and she got near about 1200. I mean 12K subscriber, and see 1500 people are watching his stream. I mean her streaming. I would love to recommend her to all of you so that you can join to her live streaming, and then don't forget to tell me if you get something from her or not. Okay, I would love to know because I was watching her streaming and I was thinking why most of the people are watching her video or her streaming. Okay, so I was confused. That's why I'm just recommending her. Don't think it's a hate or something. No, nothing. Okay, I'm just recommending her to all of you so that you can watch her streaming. And please, if you like her streaming, that's perfect. Please watch her or subscribe her, follow her, whatever you want to do, you can do that. Okay, I'm not telling anything else because you can see the. Let me actually show one more time. I mean, the boss is here, the inner circle trader. Okay, so he is here to her live streaming. Now, that is the reason I'm just showing her. I think you will get something that will help you for building your trading psychology or trading journey. Okay, you will get something very useful from here, but don't forget to let me know that whatever you will get from her, please don't forget to let me know that. Okay, I'm just recommending her because I saw inner circle trader over here. Maybe Patrick, I don't like him, but inner circle, when he is here, maybe he's actually providing something very useful. I believe that. Now I didn't get anything, that's a different matter, but you could get something from here as well. So that is the reason I'm just showing her. So you can say the name, see the name, Sanja Trades. He actually did live every single day. I mean, she do live every day. So you can watch her. Okay, that's the introduction. I know it's a very boring introduction. So all good. Okay. Hey George, how are you? Hey Remy, how are you, brother? So really start my boring streaming. I mean, I have a very few people, but I am happy with that because whoever I'm getting here, they're all of them are actually very consistent. So I think you guys are getting something from here. Yeah, sorry, man. Yeah, we can start. Sorry, that brother. From Easter, I mean the day before Easter, I think I was live and I told you about the breaker and the 4 hour fair value gap, then the hourly fair value gap. Okay, right now I don't need this hourly fair value gap, but this is the 4 hour fair value gap, and this breaker. I told you I would love to see if this breaker can hold the price or not. If it can hold the price and send it back, that's cool. If it failed, then I would love to see the higher run. So we have two directions, two price action. So you can see that is the mohawk. I mean, a little wick went above the breaker, So that is Mohawk in my opinion. And then price this breaker hold the price, send it back. Now this candle didn't close yet, but if I see this candle close below this breaker, that is kind of confirmation that market is going to take that low. So that specific low, market is going to take that. Below this low, I have this hourly fabric of constant encroachment, and the constant encroachment over here, I don't remember from where I have marked it, but that will be my second target. So I would love to go to 1 hour chart now. From 1 hour chart, now I need the 1 hour fair value gap, the hourly fair value gap. Look over here, where the body close at the level, I mean at the level of the constant encroachment. Yeah, wick went little bit higher. I don't care about the wick. I care about the body. So body is closed at the level of the constant encroachment of this hourly fair value gap, and then it send it back. I mean the price started to go lower. Now I don't need this breaker now. Remove this one. When I'm here and I'm going to remove this for our fair value, I'm fair value gap as well. So this is the hourly fair value gap in single way. Price came to this hourly fair value gap. The body is closed at the level of the constant encroachment of the hourly fair value gap, and it started to go lower. When it started to go lower, all of these lows, okay, I would love to mark this low. When when price started to go lower, this low was my target. This is kind of confirmation that market is going lower from hourly chart and 4 hour chart. Now I will go to Nasdaq. I have a delayed data. I'm very sorry for that. Try to live trade with her. Live trades with people. Why do I do that, brother? Hydra is going to live trade with her New York Open one day in January. That's cool. Hi, brother. Sorry, little delayed. No problem, Ravi. We're at the right moment. Julie, why I will do that? I mean, why I will trade with her? Why? That is my question, brother. Why? So over here, this is the 15-minute chart for the Nasdaq market. Okay, so that was the buy side liquidity from Friday. Those lows were very clean, and Friday high it failed to take that buy side liquidity. Instead of that, it has made that buy side liquidity more stronger. I told it beforehand. Okay, that was my last 15-minute travel gap. Now at the London session, price went lower. What do I mean by that? It went lower. That is expected. Okay, if you are thinking market is going to take that buy side liquidity, if you are very much confident that market is going to take that buy side liquidity, okay, then you have to expect some kind of opposite run at the London session. So that is kind of the Judas swing or fake move. People will start to think market is going lower. That is why we expect opposite run at the London session. Not always, but most of the time we see this type of opposite run. Price went lower, it has taken this sell side liquidity. Now it came to this daily fair value gap. I don't care about this. Okay, I'm not going to use this fair value gap to read my price action now. Why? Because I got the rejection from the constant encroachment over here, and it's enough. That means the last daily fair value gap hold the price. That's enough for me. Now if you see, I mean if you ask me, brother, it has rejected from the constant encroachment, now it come back again to the top of this fair value gap. That is kind of the buy setup. No, I'm not agree with that. I explained that because this is the last fair value gap. When price come to the last fair value gap, we only think one setup, and that is if it can hold the price. If it can hold the price, then we will expect some kind of, I mean the setup, it has to take the liquidity, market structure shift, fair value gap, then it will expand higher. That should be your expectation when it is about the last fair value gap, and last fair value gap can hold the price. If price go through this fair value gap, then you can expect that type of, I mean setup, I mean this type of setup. Okay, that means price actually went through this. That was the last fair value gap. Okay, this is the last fair value gap. Now it went through the last fair value gap, then you can expect this setup. If it can go through the last fair value gap, then you can expect this setup. But if price come to the last fair value gap, and hold it. Okay, if price can hold the price, you have to wait for this setup. It has to make some kind of liquidity first. It has to take the liquidity, market structure shift, fair value gap. That should be your entry if there is any buy side liquidity from 1 minute chart. So this is the two way you will use the last fair value gap. Now when it will go through the last fair value gap, just make it more clear, brother, because I got some messages from some of you. You are confused about this. I mean, you look the consequent encroachment rejection, then top of the fair value gap, you look for the entry, but that is not correct. Okay, now you can wait for this setup from here as well. It will make some liquidity, it will take that liquidity, it will go through the, I mean, it will give me a market structure shift, fair value gap. Yeah, that entry is also valid. Okay, this is also valid. That means 22 YT model is valid both of the side. But if last fair value gap can hold the price, then over here I will look for the 22 YT model. No other setup, nothing over here except the 22 YT model. If price go through the last fair value gap, then I will look for either consequent encroachment rejection, come to the lower of this fair value gap, I will take my sell over there, or the 22 YT model. Both of them are valid over here. Okay, I hope it's clear. uh, get popular. She has 12,000 followers, and I learn a lot from you. Thank you. Thanks, Julie. Bro, my bias is good, but my stop loss getting slipped when I take my entry in lower time frame. Okay, if you fall, I mean, if you are facing this problem, then you have to either you have to manage your entry point, or you have to put your stop loss much bigger. I mean, you are actually putting your stop loss too tight. It can happen, but slowly you will overcome this. I believe that, brother. I mean, I believe that he will overcome that problem. Everyone faced that type of problem. I also faced that type of problem in my at my beginning. Okay, but all you need is to wait, or is to observe the price for longer time. Can you show the daily fair value gap a little bit here? Okay, so you would love to show the daily fair value gap. So this is the daily fair value gap, brother. This is the last fair value gap from the daily chart. Okay, look at this leg. This is the last fair value gap from the daily chart, and I'm using that daily fair value gap from 15-minute chart. I would love to see from 15-minute chart if price can hold. I mean, this daily fair value gap can hold the price from 15-minute chart, not from daily. What to say? I mean, the daily chart. I will look for 15-minute chart over here. Okay, and when I will use the last 50-minute fair value gap, I will go to 1 minute chart and I will look for that price can hold the price or not. I will do that. And now this is the 15-minute last fair value gap. Anybody has any confusion about this? I don't have any confusion. So this is the 15-minute last fair value gap. I'm now going 1 minute chart. So from here, this is the 15-minute last fair value gap. So at the morning session, I have marked this buy side liquidity. There was my buy side liquidity over here, and I had also some buy side liquidity over here as well. Just let the chart load first, then I will show you over here. So that is another buy side liquidity over there. There's two buy side liquidity, on level here, on level there. Now I have tweeted when price was over here somewhere. I saw, or here. Okay, I don't remember where I have tweeted this one, that this buy side liquidity was very clean. Okay, I think price was over here. So when this is the last 15-minute fair value gap. Now look at this run. Look at this run. What is this? What do you think? Price went lower, it come back again. Where did it came? To the 15-minute fair value gap. What does it mean? That means this kind of fake breakout. Okay, this is the fake breakout. At the London session, I was expecting lower run, so price gave me the lower run. After giving me the lower run, when price went below the 15-minute fair value gap, very soon it come back again inside the 15-minute fair value gap. Now look, there was no consolidation. This is type of consolidation. This is consolidation. This is consolidation. This is consolidation. Mm, and I mean, all of you know what is consolidation means, okay? But look over here. Price went lower. I mean, 5 to 10 minutes. It stayed over there. Go back again inside the 15-minute fair value gap. When price come over here, it went through this 15-minute fair value gap. It come here. That buy side liquidity is much more cleaner. Very clean buy side liquidity. So price is here. What will you do? You will take your entry over there? No. I'm thinking this 15-minute fair value gap has hold the price. It hold the price. Instead of this buy side liquidity, you have buy side liquidity over here. That is very clean buy side liquidity from 15-minute chart. Remember, from 15-minute chart in Friday, price failed to hold. Price failed to take that buy side liquidity. Instead of that, it has made that buy side liquidity more stronger. And now, when price go above this 15-minute fair value gap, what does it mean? That means price is going above toward that buy side liquidity. I mean, toward that 15-minute buy side liquidity. I don't care about that. I have 1 minute buy side liquidity over here. I have 1 minute buy side liquidity over here. That is also very clean. This is the new week opening gap. Okay, this two blue line is the new week opening gap, though it's very small, but I don't want to use this new week opening gap, but I marked it as it is very small. I don't want to use that. Okay, that is the thing. So I have tweeted, I think price was somewhere here when I have tweeted that mark the buy side liquidity. Well, now what I told you, when the last 15-minute fair value gap will hold the price, you have to wait for the well-known setup. What does it mean? Not well-known setup, I mean the 22 YT model. It has to take some kind of liquidity. Now I'm going to mark this liquidity. Is that clean sell side liquidity taken? What we are doing over here, when I have tweeted this buy side liquidity, are you going to take your entry over there? Or this fair value gap, are you going to take your entry toward, I mean, depending on that fair value gap? There is another fair value gap. Look over here. So let me actually mark it. Are you going to take your entry to that fair value gap? This is very clean fair value gap. I mean, very clean run. Are you going to take your entry over there? No, you are not allowed to take your entry over there. Why? Because price didn't take any buy side, I mean the sell side liquidity, but brother, it has taken this sell side liquidity, right? If you mark this little sell side liquidity as your liquidity taken, then you have to mark maybe this buy side liquidity or this last imbalance. You can't go toward that buy side liquidity, because look how much sell side it has taken. If you mark this one, okay, let me mark it. So if you mark this liquidity as your liquidity taken, and then maybe you have marked this one as your buy side liquid, I mean market structure shift. After shifting market structure, you saw this fair value gap, you are willing to take your buy to that fair value gap, and you put your stop loss over there. Where should you target? To that 15-minute buy side liquid? No, you have to target this buy side liquidity, this buy side liquidity or that buy side liquidity. Okay, I mean that buy side liquid. If you have chance to take a partial, then you can mark that buy side liquidity, and you have to take your partial above that buy side liquidity. There is last fair value gap from 1 minute chart. There's much more possibility that market will come to this 1 minute fair value gap, last fair value gap. It will hold the price and send it back to lower. Okay, now let me actually mark the last 1 minute fair value gap. Everything is very precise, brother. Okay, you have to understand the thing. Now look, price came here, send it back. Why this fair value gap hold the price? Because you have marked this liquidity. This is not a big liquidity taken. Okay, that is why I'm expecting prices coming here, not toward that buy side liquidity. Let me actually remove all of this level. Now when I have marked this one as my liquidity taken, now see how many liquidity it has taken. It has taken this low, that low, they are relatively equal lows, this low, that low, that low. Oh, is it clean sell side liquid taken? In my opinion, that is very clean sell side liquid taken. In my opinion, okay. Now I'm not going to use this 15-minute fair value gap for reading my price, as I didn't read my price here when it came to the daily fair value gap, because it has done its job before. Over here, when price went through this 15-minute fair value gap one more time, and I saw this price action, this 15-minute fair value gap has already done its job. I don't need this one anymore. Now I'm putting it over here because I would love to tell you whole of this price action. Okay, I mean below this 15-minute fair value gap, the price action, this is not important. This is not important at all. Price came lower, it went higher. No consolidation, no liquidity over here, nothing over here. All of this fair value gap, it doesn't have any importance. Okay, it has no importance until now. Why until now? After taking a very clean buy side liquidity, then it could be very important when price will start to come lower again. Maybe after 1 year or after 6 months or after 1 month, then it could be important. But right now, it has no value. Now, if I saw there was a consolidation, okay, maybe it has consolidated until here, then it went higher. Then this fair value gap would be valuable. This would there was chance that price could trade that type of fair value gap. But in my opinion, this is not even a consolidation. Okay, it just came lower, it went higher. Very clean run. Okay, you have to identify this. This is kind of thing I can transfer. This is kind of experience. When you will see this type of price action, you will mark this and you will start to understand that when you can avoid those type of fair value gap. Okay, and another thing is I'm not going to take my entry over here. Try to understand, brother. I'm not going to take my entry over here. Why? I'm thinking this 15-minute fair value gap has hold the price, so I have to wait for the perfect setup. What the perfect setup? It has to take the liquidity. Then I need a market structure sheet. Now, when I saw this is my market. I mean the liquidity taken. I'm going to just what to say, the mark the market structure sheet first. I'm just removing this one. Now here I have a high, so I got this thing as my market structure shift. Is it valid for shifting market structure? No, brother, it's not valid for shifting market structure. Why? Did it trade that fair value gap? No, it didn't trade that fair value gap. It has to go inside that fair value gap. Brother, this is very important when you are in 1 minute chart or 15-minute chart. You have to understand that which high you are going to mark for shifting market structure. You have to mark it with with so much confidence. Okay, so it didn't trade that fair value gap, so this is not my market structure shift. I got my market structure shift when price went above that high. That was my market structure shift. This is my rule. I'm not telling you because ICT even didn't talk about this. I so far I know. So this high has traded that fair value gap, but is this a swing high? No, this is not a swing high. This is just a price leg. This is a leg. This is not a swing high. Swing high is something like this. This is a swing high. This is a swing high, but this is not a swing high. Okay, in my opinion, this is a shifting market structure. If you are not agree with that, it's up to you. After shifting market structure, I really love to go for my two fair value gap. So where is my two fair value gap? Where is my first fair value gap? This is my first fair value gap. That should work as a breakaway gap. I will come another point. I mean, I got upset when I told all of you to mark this setup. Nobody actually asked me the question. I got very upset over there. Okay. Now I'm going to mark this one and that one as my two fair value gap. But look where this fair value gap resides, at the level of the sell side liquidity, right? This fair value gap is at the level of the sell side liquidity. So why I'm actually using this fair value gap? And you can see price didn't came over here. So in my rule, whatever I told you, that if you see a fair value gap at the level of the liquidity or below the liquidity level, then this fair value gap is not valid at all. Price shouldn't come over there. Even price didn't come over here. But after that, I marked this as my breakaway gap. I could have marked this fair value gap as my first fair value gap and that one as my, I mean the last fair value gap or the breakaway gap. And you can see it worked perfectly over there. This is fake breakout. I mean price came little bit lower of the consequent encroachment, but that is perfectly the fake breakout. Okay. So why I have marked this fair value gap as my breakaway gap? Nobody asked me this question. Nobody talked about this, and that is kind of sign that you actually don't write down the rules. I told you please write down every rules, otherwise you will forget this, and if you forget, it will hurt you. Okay. Now I have no idea why you you didn't mark this one. Okay, whatever, let it go. Why I have marked that one as my last fair value gap when it is at the level of the sell side liquidity. As I see, this is very clean sell side liquidity. Price, I have marked this as my sell side liquidity, but basically the liquidity taken happened over here. The liquidity taken happened over here. So that is actually the liquidity taken, not that one. This one is very clean, but liquidity taken happen over here. But you can ask me how, brother. See, this low, that low, that low, that low. They're all relatively equal lows. Price went below that level. Can you see it? It went below that level. So the main liquidity taken happened over here. It happened over there, not there. But in eyes, you can see this is very clean sell side liquidity taken. I'm not, I mean, if you mark this one as your liquidity taken, I'm not going to argue with you. But basically, the liquid taken happened over here. Now, what is this then? Why this fair value gap is important? I wouldn't mark that one. Even I wouldn't care about that liquidity. I care about this liquidity. I care about this liquidity taken. Okay. I mean, let me mark it until here. I can. But why I'm going to mark this one? Why I was thinking price can come over here because of the inversion fair value gap. Let me mark. I'm remove that one. Just a second. This is my inversion fair value gap. Inversion fair value gap. Okay. Why this is my inversion fair value gap? I talked about this so many times, but I'm going to explain that one more time. Okay. Price is going higher, then it started to go lower. That is a very clean run. Okay. When price come over here, this fair value gap is more obvious that price should come to that fair value gap, then it should expand lower. It should expand lower. Instead of that, it went higher, and this fair value gap, I mean, this fair value gap has made as an inversion fair value gap. Why? Because this low failed to take that low. If this low would go below that low, I wouldn't mark this fair value gap as my inversion fair value gap. When it failed, there is no other swing low except this low. That is why I'm talking about this low. But if there was a very clean swing low, I mean a very clean swing low, then I wouldn't talk like that way. I mean, I wouldn't change my statement over here. But I can see this swing low failed to take that swing low. That is more obvious swing low. That is why this swing, I mean this fair value gap has made a very clean inversion fair value gap. There is 99% of the chance price could come to this fair value gap. Especially, I mean, more specifically, this fair value gap is much more valid. Okay. Now, price didn't come over here. You can say, okay, brother, you are wrong this time. No, I'm not wrong. I'm just giving you the decision. I'm giving you the level so that you can be, I mean, you should be careful about this type of fair value gap. Okay, that is why I'm just explaining the things. Even I don't need to explain these things, right? I don't need to talk about this when I was right. Nobody asked me about this, but I'm talking about this so that you can be careful. You should be careful. You can learn these things. Okay, maybe price could come over here. Maybe it didn't come here. Doesn't matter. But in future you will see price could come to this fair value gap. Now I would love to mark this low and that low. You can say, brother, it came to the equilibrium, not even, I mean, the OTC or optimal trade entry, but it came to the equilibrium. So you took that entry depending on that equilibrium. No, I'm not going to. I'm not actually watching my price depending on the PDRA. I just use the fair value gap because I would love to make my things simple. Okay, I would love to take more risk, but obvious risk. Okay, so that is the thing. Uh, if the day fair value gap breaks lower, can we expect a short entry on the same day fair value gap? What is your question? If the daily fair value gap breaks lower, can we expect a short entry on the same day daily fair value gap? Yeah, obviously you can do that if only if there is any clean sell side liquidity. If there is no liquidity, you are not going to take that entry. I mean, no entries are valid if there is no liquidity level. If there is a liquidity level, every kind of entry is valid. Okay? So you have to find out liquidity first. I told this so many times. After opening your chart, the first thing you have to do is you have to mark your buy side liquidity if there is any, or the sell side liquidity if there is any. And in my opinion, relatively equal highs or relatively equal lows are the liquidity level, not swing high, swing low, PM session high, previous day high. No, I'm not looking for them. Okay, I only look for relatively equal highs or relatively equal lows as my drawn liquidity. That is my thing. So I'm not going to force you to do that. 1 minute market structure. Can we possible entry? 1 minute MAS. Can we possible entry? I didn't get your question, brother. 1 minute market structure shift. Can we possible entry? Obviously, if everything works perfectly, then we can take our entry. I mean, we are going to take our entry by 1 minute market structure shift. Okay. I'm usually pending fair value at breakaway gap. Why I miss the move? Okay, I think you got the point. Whatever. I'm just talking about this, and don't think this is all hindsight. I have tweeted everything beforehand, so I had the delayed data, so I couldn't able to take the entry, but I explained the things to my Twitter. Okay, so market has taken that buy side liquidity, then it has taken that buy side liquidity again. Okay, so I'm going to remove both of those buy side liquidity. So where was your first entry? If you would take your entry before the, I mean the AM session, that should be your entry. Your stop loss has to cover the breakaway gap consequent encroachment. Just let me remove the this one and let me mark the breakaway gap. So this is the breakaway gap. As this breakaway gap is this is Nasdaq, brother. This is Nasdaq. So over here, I mean the breakaway gap consequent encroachment, you have to cover. As this breakaway gap is too big, then you can put your stop loss just below the constant encroachment. But if it is small, then you can put it below the breakaway gap. I will go with this. Okay, I mean just below the constant encroachment. And where will be my target? I will go for this buy side liquidity because that is more obvious. Okay, it's kind of 20 handle. If you think it's not enough, just avoid this trade. It's up to you. Okay, so price has taken the buy side liquidity from both buy side liquidity. Then I would love to go 15-minute chart one more time. I'd love to talk so everything over here. Okay, so now I'm going to um, there was a 15-minute fair value gap over here. This is the last fair value gap. I'm just marking the last fair value gap. Okay, not any other fair value gap. I'm showing you the precision how you can use the uh, last fair value gap. Okay, and I'm going to mark this fair value gap, and finally this fair value gap. This is also the last fair value gap from 15-minute chart. Okay, the last fair value gap, and this is the buy side liquid level. Okay, do you think price will close inside Friday range? I don't need to see that. I mean, I'm not expecting anything from here because first month of the year is really difficult to trade. Okay, I mean the narrative, everything doesn't work perfectly at the first month and at the last month of the year. So first month and last month of the year, you shouldn't look for the long time precision. You can just go to the chart. If you see some kind of reaction from lower time frame, I mean from 15-minute chart, 1 minute chart entry, is cool. Just take your entry, get out from the market. Don't look for the long term precision. You have to wait until the first week of February. After the first week of February, everything will start to work with the precision. Below, I mean before the first week of February, nothing is precise. So I'm not going to hold some kind of expectation until then. No problem, Remy. I hope we will meet again. Okay? So now I would love to mark these two fair value gap, this one and that one. Okay, so price was over here somewhere. somewhere. I have tweeted that. Let me mark over here. I have tweeted, look the 15-minute fair value gap over here and that fair value gap over here. I didn't see any sell side liquidity. I see buy side liquidity. I can see only the buy side liquidity. Okay, price was over here somewhere. I told you, look the lower fair value gap and the higher fair value gap. When I tweeted, I can see only the buy side liquidity. What I'm expecting? I'm expecting this lower fair value gap will hold the price and this fair value gap will fail to hold the price. So price come to this fair value gap. It has taken the sell side liquidity from there. See this low, this low. It has taken the liquidity. This lower fair value gap has hold the price. So you didn't see my comment. What was your comment, brother? Can you please check GBP from day to 15 minutes? Okay, okay, Mayank. Let me finish this first, then I will go over there. Okay, just give me some more time, then I will go to GBP. Just remind me one more time when I will finish with Nasdaq. So if you remember from dollar index, I'm expecting prices going lower. Why? That breakout, the breaker block, also the hourly fair value gap and the 4 hour fair value gap, everything hold the price and send it back to lower. So I'm expecting dollar is going lower. I'm expecting every other market is going higher. Okay. When I've tweeted this, look those fair value gap and let's see we have the buy side only. What does it mean? That means I am not expecting this fair value gap will fail to hold the price, but this fair value gap will fail to hold the price. What price did? It came to this fair value gap, it went higher, it went through this fair value gap. Now you can tell me, brother, there is a clean setup over here. It has taken the liquidity. Maybe this is your market structure shift. This is your market structure shift. After shifting the market structure, I have two fair value gap. One is over here. Okay, I'm just going to mark everything. This is one fair value gap, and that should be my breakaway gap. Okay, and I'm going to remove the new day, new week opening gap because I'm not working with that. So you can tell me that, brother, what time do you focus in your work session? I focus after 9:30, brother. Most of the time after 9:30. But sometimes it's good to trade before 9:30 because the price action are much more clear before 9:30. But 99% of the time I focus after 9:30. So this is market structure shift. Price has taken the liquidity. This is your first fair value gap. This is your breakaway gap. And see, brother, nobody closed below the constant encroachment. So I should take my entry over there. I have very clean buy side liquidity over here. That is a valid entry. I'm not going with you. This is the place you have to understand that every setup is not for taking your entry. If you try to take your entry now, this time it worked. Okay, it worked perfectly. This time it worked. I'm not argue with you. I will tell you, yeah, this time it worked, but I'm not interested to take this entry. Why? Look, when price came to this lower fair value gap, it went higher fair value gap. Where the price closed, it closed inside the last 15-minute fair value gap. That means the last 15-minute fair value gap hold the price. Then it started to go lower. How can you know that market is going higher? How do you know that? I don't know that. This can hold the price, send it back. It can take much more lower price action. Maybe it can come to this 1 minute fair value gap, last fair value gap. It can come over here. Easily it can do that. This time it worked. That doesn't mean every time it will work like that way. This is gambling. You have two levels, very near, one above another. This is the lower 15-minute fair value gap. This is the higher 15-minute fair value gap. Price come to this lower 15-minute fair value gap, went higher 15-minute fair value gap. If I saw a body close above that 15-minute fair value gap, then I could argue that yeah, maybe I can take that entry. But look, where price closed, just don't look at this price action. Okay, don't look at this because your entry should be happen over here. Now, when it came here, this is not a valid entry. So this is very clean. I always call this as our well-known setup, but this is gambling. If you take your entry over here, that is gambling. Okay, brother? Try to understand. The price action, you have to understand when you should act, when you should take your entry. Now, price went above. It closed above the last 15-minute fair value gap. It went above it. Now, is this setup valid? is this setup valid when price come over here? No, it is not valid yet. It's not valid anymore. Why it's not valid? Because this thing happened when price was inside that fair value gap. So this is not a perfect setup. If price can take this sell side liquidity this low, if price could take that low, then if it could take another market structure shift, that has to be happen above the constant encroachment of the last fair value gap, then I would love to take my buy. Okay, so this setup is not valid. I'm going to remove that from my chart. Brother, I'm not here to show off. I'm not here to tell you that see how many times my setup work, my thinking, or no, I'm not doing this. I'm just showing you so that you can be careful. This time it worked perfectly, but you can be stopped out. Price easily can come to this breakaway gap. It can come over here. Okay, so you have to be careful. uh, how to correctly use the volume balance to enter a trade. So the volume balance is kind of the fair value gap, and volume balance trading is much more difficult. I mean, I won't recommend it to you to take your entry depending on the volume balance. Okay, you can add some partial. I mean, you can pyramid your entry depending on the volume balance, but for taking entry, I'm not recommending it to anyone. Okay, you need more experience to take entry depending on the volume balance, because it is so confusing to mark the exact volume balance which is working over here. Volume balance, you need more experience. Okay, that is my thinking. Now if you want me to talk about that, that will confuse other guys as well, so I don't want to talk about that as well. What I don't want to talk, I will not talk. Okay, I'm sorry for that, brother. So over here I told you, just look if I mean someone actually comment that what you are looking for here to my Twitter. I told him that I would love to see some kind of liquidity taken, market structure shift, fair value gap entry. So I got my market structure, I mean liquidity taken over here, very short term of liquidity taken. Then I got the market structure shift over here. This one is my market structure shift. I will force market to show me this one as my market structure shift, but if you ask me, no, I was actually looking for this run to take the liquidity. It will go below, little bit below of the last fair value gap, then it will go above that high. I will look for some kind of entry over here. Okay, I wasn't in front of my chart because I was delayed. I mean my chart is delayed, you can see it's delay over here, 10-minute delay. So I wasn't in front of my chart, but I was watching the market 10-minute delay, but as a live market. Okay, so whatever, price didn't give me any setup over here. Now that is the thing, brother. I didn't get any setup over here. Price started to go higher. This is the last fair value gap from the 15-minute chart. Let me show it to you. So look at this run, look at this leg. In that leg, that was the last fair value gap. I didn't get any setup over here, so I'm going to remove that one. This 15-minute fair value gap hold the price. I have already talked about this. I'm going to remove that one as well. So this is the exact leg, and this is the last fair value gap before taking that buy side liquidity. Before taking that buy side liquidity, this is the last 15-minute fair value gap. I have tweeted, if you take your entry to this fair value gap over here, if you see any kind of setup here, and if you can take your entry, hold it until the last 15-minute fair value gap. That is the last 15-minute fair value gap, and observe price. If you get any kind of setup over here, please take your buy, I mean entry, and that buy side liquidity will be your target. Okay, now let me talk about here. I have uploaded a video to my Twitter. If you have watched that already, then I believe that you have already watched that video. Okay, so it came, I mean it went through this 15-minute fair value gap. It went through that 15-minute fair value gap, and it was after 9:30. So our 9:30 was over here. That is the 9:30 candle. Price went above. At 9:30, what we expect some kind of volatility. Okay, so what do I mean by that volatility? Now this is kind of thing how you will read the 9:30. Okay, price actually makes some kind of liquidity only because only for 9:30 or the news. If there is any news, price build the liquidity for that news. If there is no news, then price build the liquidity for 9:30. So this is the 9:30 candle. I'm expecting price is going to take that buy side liquidity. That is my expectation. From where this is, I'm expecting all of you know that. So at 9:30, it failed to take the liquidity. See, price just went above. What does it mean? That means 9:30 volatility doesn't take the liquidity. That means I'm not expecting liquidity taken anymore. I don't need to expect that price is going to take the liquidity. Now, is it going to work every single time? No, man. It's not going to work every single time. But you will see 95% of the time it works. Okay? I'm telling you, brother. Nothing works 100% of the time in this industry. But you can expect something that will work 80-90% of the time. So if you see at 9:30 volatility missed liquidity taken, you don't need to wait for taking liquid taken anymore. You don't need to wait for that. I have the last 15-minute fair value gap over here. This fair value gap failed to hold the price. When price went above that fair value gap, I was thinking about two setup. Okay, the first setup is this setup. I always talked about this market will actually do this type of things. Okay, I will wait for that setup. So over here I was expecting price will come to this concurrent crossman, but it failed to come over here. When it failed to come over there and it went above the last 15-minute fair value gap, I got this order block. Now I didn't take my entry to that order block. I didn't take my entry over there. If you watch my video, you have already know that I didn't take my entry over there. After that, I got this little volume. Little fair value gap. Sorry, brother. Ah, catch. The cold catch me. So that was the fair value gap. I took my entry over here to this fair value gap, and my stop loss covered the mean threshold of this order block and also the 15-minute fair value gap high. So the mean threshold is over here. This is the mean threshold of the order block. So I have covered the mean threshold of the order block and also the 15-minute fair value gap high. I covered it by my stop loss, and I have targeted this buy side liquidity. I think little bit above the buy side liquidity, that I was believing that market is going to take that buy side liquidity perfectly, and I have marked that in beforehand. Okay, so don't think this is all hindsight. I marked it. If you are with me in my Twitter, you already know that. Okay. So price come over here to this fair value gap. I was thinking price can come to the mean threshold one more time because this mean threshold and the 15-minute fair value gap are at the same level. But price didn't come over here. I'm happy with that. Now this is kind of 1:1 risk reward ratio. It's not a good trade, brother. Now I can tell you, brother, please hold it until here. Okay, here. Say it worked perfectly, and it is kind of 1:4. 1:4. How beautiful it is. That is also very clean buy side liquidity. Let me show it to you. If I can show it to you. Actually, I don't know it will load it or not. Let me go to from 550 meter. So that was from 1 minute chart, that is very clean. That was a shallow run. I marked that shallow run high as my liquidity level. I talked about here that whenever I see that type of shallow run, that made me more confident that market is going to take that shallow run today or tomorrow, but it is going to be taken. I was here in front of all of you, and I told that. Okay, that is why I have marked that bicep liquidity. So I can tell you, brother, please take your entry over there and hold it here. I can show you 1:4 risk reward ratio, and it worked perfectly. But I'm not going to tell that, brother. I'm not going to do that. Okay, I would love to take this entry. That will be my target. I don't care about the risk reward ratio. I care about the handle. How many handles I'm going to take? 22 handle. If I'm right, 7 of the times out of 10, I don't I don't need to care about the loss or losing entry. Okay. Now I could put my stop loss over, I could tell you that I am going to cover the order block level, then or maybe little bit below here. Maybe I could take stock like that way. Then the risk reward ratio would be 1 is to 2, 1 is to 2 or something like that. Okay. Now I'm not going to do that as well. I'm going to show you where you should put your stop loss. You should cover the min threshold of this order block because that is very important. And now, if you are not going to mark the order block, or if you are unable to mark the order block, you have to think about the high of this 15-minute fair value gap, last 15-minute fair value gap, as this fair value gap happened over here and there was no sell side liquidity taken, no consequent encroachment rejection, nothing over here. That is why you have to put your stop loss just below the upper level of this last 15-minute fair value gap, and that should be your trade. Okay. Now if you take 3 4 contracts, then you can take your partial over there and you can hold your trade until there. You can do that. I'm not telling that is wrong. You can do that. But if you take one contract only, then you have to put your stop. The best thing is at the level of the buy side liquidity. This is the best level. Okay. Just at the level of the buy side liquidity. But as I put it little bit above, because I was thinking market is coming over here, that is why I put my target profit over there. So that was the setup for me today morning. And I mean, this is the way I read the price. I read the last fair value gap and I get the precision. If you need more things like market maker X model, then maybe quarterly theory. Okay, I one more thing. I had I had started to study the quarterly theory. At the first, or at the beginning, it was very interesting, and later I saw it doesn't work most of the time. Okay, so I leave it, and I don't want to add it with my trading. So I'm not telling any of you that you should leave it as well. If you find precision from the quarterly theory, please go for that. Please go for that. Okay, I am not getting anything from there, so I'm not studying that anymore. Okay, I do something that works most of the time, and I'm very happy with that. So that is the thing. Which platform you use, bro, and how much you funded, my brother? Okay, I use the the top step. Okay, before top step, I had FTMO. Recently, I have blew my FTMO account very recently. Okay, because I didn't have the what to say, the data over here, and no, I blew my account before that. Sorry. I blew the FTMO account before that, and right now I have top step one account only, and that is 50K combined. I mean the express. I have trading now right now. Very soon I will blow that as well. Okay. I talked about this last time. I'm going to blow that account as well. I want to start my own funded account. That is my plan. Okay. I just need support from my mother. I mean, I want to take the permission from her because that's a huge money for me, for someone like me. So that is a huge money. So I will take permission from my mother. If she tell me that you can start, I will start my live trading, and then I will blow my top step account as well. I mean, blow means I will do over leverage trade, and if it works, I mean, I will do the gambling. To be honest, I will do gambling. If it works, then it will work. Otherwise, boom. Okay. uh, uh, okay. After your advice, I found better price action on Nasdaq. That's cool, and that's good to hear, brother. New. Take medicine, bro. You have cough. Yeah, I mean, cold catches me. Last time I was playing cricket at midnight, and that day actually I catch cold. When price get ahead, it hard to take the long position. Read up. The thing is, I was going to talk about that. Now, here, if you see the premium and discount, okay. So this is the premium and discount. I talked about this so many times. I love to take my buy at the deep premium. I love to take my sell at the deep discount. I love to do that because I don't read the price depending on PDRF. In my opinion, very little people know how to mark the PDRF or the premium discount area. that very little people know. I talked about this already, but I'm going to repeat that one more time. In my opinion, 0.5% of the ICT trader, I mean ICT students, know how to use the premium and discount array. 0.5% only. They knows how to use that. Rest of all, just show you, like, if I take my entry, buy entry over here. Now I can show you this is at the discount. How do I show it to you? Let me actually show it to you. I'll go to 1 hour chart. So this is the 1 hour chart, okay? And I'm going to mark the 1 hour premium and discount area from here to here, okay? So this is at the deep discount. So that buy setup is valid, right? This buy setup is valid. Now if I go to 15-minute chart, then I have to mark this dealing range from here to here. If I take my buy over here, I showed you how to take buy over there, okay? If I take my buy over there, where is the level? That is in the deep premium. Above this 50% premium level, below this 50% is the discount level. So if I take my buy over here, that is at the deep premium. How do I define which one is premium and which one is discount? Now I'm not telling premium and discount doesn't work. I'm telling you most of the people doesn't know how to use that. I'm just telling that, okay? If you can understand the premium and discount array with confidence or consistently, if it works, please go for that, because that is perfect. For me, if you ask me, I don't need that. I don't need the premium and discount. I don't need to take my buy over here and sell over there. I don't need that, okay? So all I need is fair value gap. If you ask me, I'm happy with fair value gap because I know how price booked. Price always go for toward the liquidity or the imbalance, balance the imbalance. This is the only true reason price go, okay? Now if someone tell you price go from premium to discount, discount to premium, that is also true. But how you will mark the premium and discount, that is difficult. But how you will mark the fair value gap or the liquidity, that is very easy. I only use 15-minute chart for marking my liquidity level. So this is my liquidity level from 15-minute chart, and I'm going to mark the the fair value gap from 15-minute chart as well. So this is the 15-minute last fair value gap when price is going higher. When price is going lower, this is my 15-minute last fair value gap. Is it difficult to mark the 15-minute fair value gap? No, man, it is not difficult. I don't think so. It's difficult. I am not agree with you. If you tell me, brother, I can't mark the 15-minute fair value gap, uh, blah blah blah. Below every liquidity level from 15-minute chart, the last fair value gap is my fair value gap from 15-minute chart. What do I mean by that? Look, that high and that high, they have made relatively equal highs, right? When they have made the relatively equal highs, below those highs, where is your last 15-minute fair value gap? This is your last 15-minute fair value gap. Is it hard? Is it hard, brother, to mark the last 15-minute fair value gap? No, it's not hard. Now here I don't have any sell side liquidity. I mean, after this price action, there is no, very clean sell side liquidity, so I'm not going to mark them. But if I would say, where is my last 15-minute fair value gap? Without any confluences, you can see this fair value gap. That is the last 15-minute fair value gap. Now let me show it to you. I mean, this is just for an example, okay? I'm not telling you it work like that way, but I'm just giving you example. So over here, this is the last 15-minute fair value gap. There is no fair value gap below this fair value gap from 15-minute chart. I will go 1-minute chart and I will see if this 15-minute fair value gap can hold the price or not. If it can hold the price, I will look for a setup. If there is a sell side liquidity taken, market structure shift, fair value gap, I will take my entry. If there is a very clean buy side liquidity, there is a very clean buy side liquidity, I'm going for that. In my opinion, that is very easy to mark, okay? Okay, so Mayank, I am going over there to GBP. Okay, so doll is more important than premium and discount. Liquidity is everything, brother. Premium and discount is nothing. Liquidity is everything. This market will be continued until there is liquidity. If there is no liquidity, no trading. Okay, so liquidity is everything, brother. To be honest, brother. I don't know what I have marked over here. I have no idea. So GBP USD, right? Here is your GBP USD. Just let me. Let's taken that one. Market structure shift. There is a purple cap. There is a second purple cap coming toward that. Brother, I'm sorry because I didn't do the analysis over here, the GBP USD. So I need to see the market first, how it react over there. So this is the 12 month, and after getting here, let's come over here one time, two time. It went lower. It has taken the sell side liquidity. It has made that liquidity much more stronger. I believe market is going to take that buy side liquidity. Okay, that is my belief from monthly chart. And after taking the sell side liquidity, I got the market. There is a fair gap, order block, order block means full, perfect. This high is going to be taken. Fair gap, it should be your target. From the weekly chart, I mean the monthly chart, that should be your target. So that is two level, and I think I can minimize this one with the order block over here from the chart. I have the order block over here. I don't need this to come monthly chart. See the order block over here. This went above right now. Even the market is taking the liquidity. Why is it to have a look at? One is here. There is. Let me go from the top to bottom. Okay, that should be your breakaway gap. That should be your first parallel gap. That high should be taken. Yes, the buy side. I don't know why I have marked this daily parallel gap or type of things. I have no idea. Let me show. I mean, let me take it. Just give me one more time, okay? Ah, so you have very clean sell side over here. So I believe it is not coming over here anymore. It's because it has traded this family cap perfectly. One as well, this one as well. It is going to take that buy sell liquidity. That is my belief. From the daily chart, it is going to take that buy sell liquidity, and finally it will come to this daily fair value gap. 1 hour for a chart one more time. The only thing I'm worrying about is this sell side liquidity. Okay, that is the only thing I'm worrying about. I mean, you have to observe the price to this fair value gap. When price will come to this fair value gap, you have to observe it. If it fails to hold the price, this buy side liquidity is more obvious. If it can take that buy side liquidity, there was, I mean, one more time over there. You have to think about over here. I mean, to this daily fair value gap market. Daily fair value gap here. If it can take that, if this daily fair value gap failed to hold the price, this buy side liquidity will be must. I mean, it will be on the table. That should be taken. If this fair value gap, I mean, hold the price, there is much more possibility that market will go and take that liquidity. Look at those sell side liquidity. Very clean sell side liquidity. Okay, there is a possibility that market will come over here and it will take that sell side liquidity. So it has made the shallow run as well. Okay, that means this low and that low, they are relatively equal lows. Price has taken that lows, but that is the shallow run. If I see that type of shallow run, I go for that type of shallow run. I love to go for that. You have to observe this daily fair value gap from 15-minute time frame. So this is the 15-minute time frame. You have to watch the price from 15-minute chart. I mean, that's all I can tell you right now. There was the 15-minute last fair value gap. Like over here, look over here. This is the 15-minute fair value gap. Okay, price came to this last 15-minute fair value gap and it hold the price. If it failed to hold the price, this sell side liquidity is more obvious. Okay, but it hold the price. Look, this 15-minute fair value gap hold the price. That means market is not going over here. If it can hold the price, you will go to 1 minute chart and you will look for a setup over here. What do I mean by a setup over here? It has to take the liquidity. So uh, let me show it to you. Okay, that's cool. That will be cool. See, it has now this is though this is hindsight, but whatever I explained to my Nasdaq, I'm just going to tell you the same thing over here. First, I have to mark the liquidity. Yeah, this could be a liquidity, and that could be a liquidity. That high and that high, all of these highs, and here that could be a liquidity. Okay, you have three liquidity levels. Price came to the last fair value gap. It has taken the liquidity. It has given you a very nice market structure shift over here. This is a market structure shift. Two fair value gap. You have to take your entry to the first fair value gap. You have to cover the last fair value gap. That should be your target. You would love to hold it. You can hold it, okay, until you are happy, or to say, I don't know. So that should be your entry. The same way, I'm expecting price over here. When price is heading toward that daily fair value gap, I believe market will come over here to this fair value gap. That is my belief, okay. When price will come over here, you have to go to 15-minute chart and you have to observe the price from 15 minutes chart. That means it can come until here. Maybe it will go through this fair value gap, but it has to close below this level, has to close somewhere here. Now if you see one candle go above this fair value gap, the very next candle come back again inside this fair value gap from 15-minute chart. That is the fake breakout in my opinion. That is also kind of confirmation that market at this fair value gap is actually holding the price. Now when you should act or you should look for a sell, if price can come back again below this constant encroachment from the daily fair value gap from the 15-minute chart. If it can come here, and from 1 minute chart if you find a sell setup over there, then you will target until this low, then later maybe some other level or something over there. Now if it failed, this 15-minute fair value gap failed to hold the price, you will look for any kind of setup over here until price is above this constant encroachment of the daily fair value gap, is above this constant encroachment. You will look for that buy side liquidity because that is more obvious. Okay, you should look for that buy side liquidity. So that is all I can talk about over here. If it is helpful, then that's cool. Okay, just subscribe you limited edition. I saw a name, man. Limited edition, I saw your name before. Now it's 23. What is 23, brother? Have some views on offset distribution or accumulation? Okay, I don't know what you are talking about, brother. I'm sorry because I read your comment little late. I'm sorry for that because I was just watching the GBP USD, though I don't trade it. But my brother actually asked me to come over here, so I just came. Uh, I believe it is coming over here to this fair value gap, and that's my pair. Okay, we may tag the fair value gap above for sell off to the equal low. Hmm, okay, maybe we have CPI this week. Yeah, that's true. We have CPI. Yeah, I think in Thursday we have the CPI. If the favor hold that Reaper activates during CPI news. Man, during CPI news, I'm not going. I'm not interested to take any kind of sell. I mean, set entry. After CPI, I would love to take my entry. After CPI, okay. After CPI, maybe 15 to 30 minutes. Maybe after the session, I'm interested to take entry. But during CPI or before CPI, I will tell you, please don't do anything before CPI or during the CPI or very immediately after CPI. Wait until 15 to 30 minutes after CPI for looking for any kind of setup. Okay, that's cool. I mean, if you look for a setup after 30 minutes, that's cool. If you just avoid that session, that is much more cooler. So wait for the PM session. That is perfect. I mean, that is my thinking about the CPI because CPI is kind of a dinosaur. Okay, you will get a very long run. CPI is always very dangerous. Let's see. We have Monday, Tuesday, Wednesday, Thursday. So we have 2 days. I mean, between the CPI and today. So we have 2 days already. When ICT release the book very soon. I guess very soon he's going to release his book because he told that when he will hit 1 million subscriber to his YouTube channel, he will release his first book. So I guess very soon he will release his first book. And I really don't know actually when he is going to release his book. I'm very much waiting. I mean, I'm waiting for his book. I would love to read his book. Okay. People both same as NFP and FOMC. First run, fake run, real run. No, not like that way. I mean, CPI, is that work like that way? I mean, if you ask me about NFP, I hate NFP. I never get precision from NFP, non-farm payroll. Okay, no, not non-farm payroll. I think no, sorry, so not NFP. Sorry, everything is. I know I'm sick, so everything is very much confusing. I hate Fed Chair Powell. Sorry, I hate Fed Chair Powell speak because that thing is very confusing. That Fed Chair Powell speak. Okay, but NFP is cool. NFP cool. NFP FOMC, both of them actually first one is the fake run, and the next run is the real run. But CPI is kind of destroying thing, okay? Because there you will get a run that is that will go from here to here, okay? That type of things, okay? CPI is kind of a killer. I really don't know what to say about CPI, but in my opinion, CPI is kind of killer. I'm not agree with that. You should avoid the CPI. Never ever try to guess the CPI. Never ever. You can guess FOMC beforehand, NFP beforehand. You can guess them, but CPI, oh man, no, no way. So I told that I will spend 30 minutes, but it's almost maybe how many what is the time I've just started my streaming? Can anyone tell me? And how many likes I got? Only 13 likes I got. I can see 25 people over here. And yeah, George, I'm also going, brother. I'm also going, but before going, just tell me. I can see 25 people over here, and I got only 13 likes. Where I have pinned my comment that please don't forget to leave a like, and still I didn't get a like from at least how many people I have. I have very small people. I am not popular like Tanja, right? Is he here? I don't think so. He's here or not. Tanja is not here. Tanja. Okay. So she has actually done her live today. That's cool. She's very popular. Okay, she's a very popular streamer. And okay, I'm not like her, but I I deserve some likes from all of you guys. So please don't forget to give me a like. And I hope today's session was little bit informative for all of you guys. You get some kind of precision from here. Please don't forget to give me a like, okay? And what did you commented over there? Oh, 30 minutes after news, 29 got burned several times. Painful for this page. Trading strategy. Because she go live trades. Oh, that's cool. Live tomorrow. Not sure, brother. Read up. Not sure. If I go, I will tweet it beforehand. Okay. Every time I do that. So if I go, I will obviously tweet it my Twitter. So thanks. Yeah, she goes for the live trade. That's a cool question. So I think I should go for that, but I'm not interested at all. I did this before. The thing is, she looks like ICT's daughter. Okay, that is the first thing she got popularity because there's some other people they're also doing live trade. Like, let me show it to you. There's other people they actually do the live trade. Okay, so Cami, I love him. His trading. Let me show it to you. Cami. CAMMY. Cami. Yeah, he, there he is. I'm not sure he's actually doing live right now or not. Yeah, over here. He's doing live trade as well. But you can see he's actually 173 people are watching him now. Okay, so the thing is, Tanja got the point because of ICT. ICT actually joined to her life and he commented on her life. Then Patrick came. Both of them actually made her popular. Okay, so if you tell me that he do the live trading, I'm not agree with you because this guy is doing the live trade from. I mean, I don't want to talk about this, but whatever. It is what it is. Some people are getting popularity, but that's cool. That's why I have actually recommended her, and I told you please go to her and Come back to me. Let me know that if you can get something from her. I want to know that. Okay. In time, 1,000 views to come. Yeah, maybe. Discord or something. Mansing. Okay. I should make maybe live trades more reach, more likes in short time. Trading strategy. Okay, that's cool, brother. Uh, I mean, maybe. I'm not sure, but maybe. I mean, it's okay. It's okay. I'm growing slowly, but definitely I'll grow. I know that. Okay, thanks for joining to my live. Thanks for giving me the thumbs up, and thanks for subscribing me. Okay, so see you guys. See you again. Bye bye.